Okay, so the reason why we are doing this today is very simple. So Lee Snedeker called me and he is leasing a space that a large brokerage in Austin owns, and he found a subtenant that a large brokerage in Austin represents. So he was going to sublease, and he was upset by all the language and the cost and all of these things. So after an hour and a half of explaining to him all of these intricacies, he understood. He's like, oh, okay, I get it now. As much as I love all of you, if each of you call me and ask for an hour and a half of my time, I would not get anything done. But you might have the same questions, especially here in Austin. And I'd say, nationwide, subleasing is probably more popular, more common than it was pre-pandemic. I don't know if that's accurate. So today, we're going to talk about leasing and subleasing. I don't know what level everybody's coming at, so we're going to start with basics, and then we can talk more intricate items of leasing, and we will take questions as well. The number one thing is I am a landlord, I'm an owner. The way that I review leasing is this simple. I'm like the bank, and my tenant is my mortgagee. So that's how I review everything. If any of you have a mortgage with a bank, that document is very, very thick. They may or may not hold you to everything, but they can. That's what a landlord really does, in my mind. My number one goal as a landlord is to get tenants that stay and pay. So a tenant may love a space, but if I don't have financials to prove that they can make that payment for 5 years, it is very risky for me. And that's really how landlords interact in this economy, this market. And it can vary. I mean, clearly, if you have 50% vacancy, maybe you just take any warm body that will pay you rent for a while. But lease space, commercial lease space is very expensive. Office retail, there's a bunch of money in build out and all of those items. Another thing, a lot of people here are commercial brokers. Whenever your landlord strokes a $120,000 commission and that tenant walks in 2 years, that's bad. They don't get to recoup any of that, or the TI, or anything. So landlords are often seen as brutal. There's a reason why. Bad things happen to them and they eat the cost. That's the number one thing, I think, from a landlord's point of view. Jim does a lot of tenant rep. He does everything else, sales and landlord rep as well. But this is the fun thing. We will sit in a team meeting and I will bring up something in a lease and he will fight me on it. He'll go, well, you need to do this for that. And I'm like, but I don't agree. So we will battle it out for 30 minutes. And it is enormous fun. Looks like we're arguing, but we're not.
And I'm the referee.
She's the referee. But you're not. So in that, Jim and I walk away so much smarter, yes, and tactical in how we handle leases, because he gets the landlord view. And then whenever he submits an LOI, he might put something in there knowing a landlord like me is going to love it. Commercial is not emotional? Sure, it is. If I like you, you got a better chance of coming in my building. If I don't like you, you won't go, period. I'll block you. Oh, I did forget to introduce myself. I'm DeLea Becker with Beck-Reit Commercial, owner, founder. I mostly work on my own assets. Jim, introduce yourself.
I'm Jim Rourke with Beck-Reit Commercial Real Estate. I primarily work as a tenant rep broker around town with office, industrial, retail, and land as well. And so I'm usually approaching the transaction from the tenant side of the transaction and trying to reduce their risk and get them the best deal possible. And so there's sometimes, where I have to play devil's advocate, where I'll get something from a landlord that might not make sense to me or my client. And I'll have to kind of pursue that a little bit further so that way we can get to a point where we have a meeting of the minds. So that way we don't get down the road and get into a situation that doesn't work for everybody.
And I
Michelle.
am Michelle Anderson, also with Beck-Reit Commercial, and I focus more on land, where I'm representing a lot of developers that are coming in to purchase the land to build and develop. So we've got to get a good price, on the land in order for them to make their numbers work, in order to have leases, tenants, those kinds of things, and the numbers have to pencil in order for them to develop.
So I will start with something that not everybody knows. A lot of people in the more sophisticated markets do. no gross lease, triple net lease, modified lease. And that really is the expenses that the landlord has, how they are passed through to the tenant. Would you say the majority of leases in Austin are triple net?
Majority.
Okay.
Large majority. Probably 95 to 99% of retail leases are triple net. Probably a good 85% of office leases are also triple net. But you do still find a few gross leases and modified gross leases in office space still. And occasionally you'll find that unicorn in retail.
A modified gross or a gross
A
gross?
gross lease.
Whoa, that is a
That's
unicorn.
very, very rare.
In your opinion, as a tenant rep side, why do you think that in the sophisticated markets we go with triple net?
I think it's easiest for landlords for triple net because the tenants are paying all the expenses under those scenarios, and it makes it really easy when those landlords and investors go to sell those properties to pass those along to the tenants and not have those built into the net operating income.
I would add on to that the number one reason here in Austin, Texas is property taxes. Property taxes can spike overnight. In residential, if it's homesteaded, you've got a 10% cap. Maybe that has changed annually. We have no cap in commercial. So a $1 million building on Travis County Appraisal District's roll can go to $2 million the next year. So that means the property tax doubles. If you have a gross lease as the landlord, I've got to eat that extra cost. I cannot pass it through. So I would say in the more sophisticated markets, we landlords get to triple nets as fast as possible. It is more complicated for accounting and bookkeeping, but it is worth reducing the risk.
And ultimately, it's a benefit to the tenants as well because they're just paying the pass-through expenses. Otherwise, the landlords have to guess what those expenses are going to be, and they usually don't guess too low. So they had a cushion there.
So I'm a landlord, and I'm just going to say I'm passing everything through. Is that okay with you, tenant rep?
No. So there are certain things that I expect landlords to be responsible for, which is basically the structural shell of the building. I expect them to be responsible for the roof, the exterior walls, the foundation, things like that. And so sometimes I do have issues with landlords when they try to get tenants to be responsible for things that I feel like should be a landlord responsibility, most particularly like roofs and roof repairs.
I also see, and I really don't mind, depending on the percentage, a cap on expenses. Do you put caps on expenses?
I love caps on expenses from a tenant rep point of view, but they're difficult to get with lots of landlords because landlords they don't have that crystal ball to be able to see into the future, and they don't want to leave themselves shorthanded either. They still want those triple nets to pass on through. So if you put those caps there, then that's restricted to landlords for sure.
It does restrict, but you could restrict the controllable expenses.
Yeah, well, typically I only see landlords willing to restrict controllable expenses. So they won't put caps on taxes or insurance. It's usually just CAM.
I agree. And I would say if you're in a competitive market and you're really trying to get the tenant space and they've got other people looking, sending in a letter of intent asking for a cap on all expenses is immediate no, and you're probably going to upset the landlord. That's just a tip.
Yeah, they'll strike it out first round of LOI negotiations.
I was on Twitter, or as we now call it X, depending on how long you've been on it, and I put out that as a landlord, I often, but I'll put a caveat, a lot of my buildings are freestanding single tenant. So it's not 20 tenants in a strip center or a 4-story office building with 20 tenants, but one tenant. And a lot of times in a letter of intent, the tenant rep broker will ask for first right of refusal if I sell the building. I personally do not fight it, but I have found that some landlords really, they do not like it. They get very, very upset. Do you always put it in your LOI?
I think if it's that type of scenario where you have a standalone building, I would want that in there and I would fight for it. But it depends on the exact location. I would push it as far as I could push it with the landlord, especially if they will offer me some type of fixed pricing. If they leave it at market, then that's of limited value to my client typically. But if we can agree on a fixed rate in the future, in the short term, that could be of value to my client.
Wait, are we talking about an extension or right of refusal?
Right of refusal.
Hold on, if I sell it.
Yeah. Are you talking about a purchase option?
Yes.
Okay, yeah, I would want a purchase option at a fixed price.
But, oh my gosh.
If I could get market.
Well, I would never do
rate,
that. This is our fighting. I would never do that. Now, I will put it in, but they have to beat the offer I got. Say if I have a $2 million building on East 6th Street and somebody at a big shop here in Austin comes along and offers me $4 million, well, then I might want to sell. If I have a lease, then I go to my tenant and I say, you've got to beat this 4 million or other terms in their offer. So it wouldn't be at a fixed price.
Yeah, it sounds like in that scenario you're at an open market rate, and it would probably be of limited value to my client in that scenario.
Does it really? It has limited value because it
If
seems.
you're jacking up the price and the price is going up that high and you're getting into a bidding scenario, they're probably just happy to get tenant.
Interesting. So why put it in? Why put it in the
It
LOI?
just depends on the building and the property. If my client is putting in a ton of money into the space,
I was going to say,
then
go
that,
ahead.
that would make a significant
It,
difference.
and it depends on the market. Maybe
Yeah.
putting it in, the market may go the other way. And so there's an opportunity there that maybe if the landlord decides to sell just because they wanted to get out from underneath it, then the tenant might have the option to purchase.
Agreed. I mean, that is, yes. Now, the landlord has to be willing to take it. So if I have a $2 million property and somebody offers me 500,000, it doesn't mean the tenant can buy it.
Right. Yeah. Just if the market goes different.
I mean, I've always added it at their request in the LOI. I don't fight it, but I do put a very short timeline on it. So if I get an offer and I send it to the tenant, they have 10 days to respond and beat it. So if I got a 1031 buyer, it doesn't mess that up.
Mhm.
So they've got to be quick. One that I saw on Twitter, which, wow, I'm going to use as soon as I can, and it is heavy-handed, was, yes, I'll agree to the first right of refusal, but all CapEx pass through. And my friend on Twitter said, if they want to act like they're the owner, they get to act like the owner from day one. I'm going to use that as soon as I can. So, okay. Do you have a problem with first right of refusal? Do you
No,
ever?
I've put it in before for clients
Yeah.
that I've worked with because initially we were looking for a building to buy, could not find one. So that's our goal was to try to have that negotiation with the landlord to potentially buy it.
And I do think that is also a strategy. There's a lot of tenants that they do want to buy the building. They would buy it, not lease it. But if they are leasing it, then they're that much closer to the landlord. I mean, that is absolutely true because I think a lot of landlords will at least call their tenant, whether or not it's in the lease, and say, I've got this offer.
I think that's generally what we're looking for in those types of scenarios.
I have a question
From the audience.
from the audience.
One, you said you had the ability to beat the offer, but do you put in there as soon as they want to go public or list the property that they need to let the tenant know, so then the tenant can have the opportunity to make the first offer because that puts them in a stronger position, or is it once you receive the offer then they get the first right of refusal? How do you between the two of that?
So the trigger is an offer comes in that the landlord is willing to accept.
Okay.
Ideally, if I'm a landlord and I put my property on the market, the tenant has, some tentacles out there and they hear first. Yeah, they would hear.
Would you ever put it in a tenant's agreement that, hey, as soon as you are going to list it or it's going to go to public market, I have to get notified within X amount of days? Because at that point in time, you build in before an offer ever comes in, it puts you in a stronger position to negotiate.
I've seen both.
I know. I think it's brilliant, and I don't know how many landlords it would fly with because of this. Landlords might have 30 properties. It is difficult to keep up with all those little bitty clauses, and you as a landlord don't want to miss that. So I would probably mark it out and say no, but you'll be the first to know. Yeah, I want my tenant to buy it because they're already there. And I personally believe owner occupant can pay more money for a building than an investor. So why wouldn't I go directly to my tenant? Now, I have also found, and this is more on the leasing side, the tenants think that they've got, that they can strong arm me. They think they've got a solid position against me. They're wrong. They're wrong. So they're like, oh yes, well, I will offer you, you want 2 million, I'll give you 1 million. No, that's not how this goes. And again, commercial isn't emotional, but it absolutely is. Yeah, you don't have that right of first refusal. You'll never hear if it sells until you sign that estoppel certificate because that landlord's not going to call you. Play nice. Play nice. Anybody
I
else?
actually have a question for you as a
Okay,
landlord. Would you ever do seller financing?
absolutely.
And what would your terms be on
I think it depends. I mean, really, and we are actually walking through this on a building in San Antonio. So we own it free and clear, so we can seller finance, and it is operated. The tenant is a CBD store, and they want to buy it, which is fantastic for me. I'm fine with that. So how we're going to do the seller finance, it's up to them.
Well-
Do they want a little payment for 40 years? Let's roll.
Yeah. Well, but because they cannot get traditional financing
Correct.
because of that industry.
Correct.
So
I do not, if a bank would do it at 8%, I'm probably going to do it at 10%. I mean, back of the napkin, right? And I'm going to put clauses in there that prepayment penalties. So if they can go get a loan from a bank at 4% and they want to take me out, fine, but you're going to pay this. That prepayment penalty will drop down every year. So the longer they're with me, I want to recoup what I have penciled out to get out of it. So as an owner, I'm very flexible in how I do it with this tenant. And then shockingly, I have figured out that it is owned by one LLC. That LLC is going to sell to Mr. CBD store. And it is going to go into a 1031 exchange, that LLC. And then myself and my husband are going to personally loan him the money for the building. So I can still 1031 my proceeds. And I'm probably going to structure my sell lease back with a higher sell price and maybe come down on my interest rate so I can get more in that 1031, more gain tax free. Yes. And I will say, here's a huge thing. This is an amazing thing about playing nice with your landlord. This tenant has been amazing. He is so easygoing. He called on Saturday and he's like, Miss Becker, the HVAC is down and he's responsible for it. He's like, we've already had somebody come out, but I want to alert you. And I said, you know what? I'm going to send out my guy because I want my tenants to stay and pay. My responsibility as a landlord is to make sure that they can stay in business. If they've got 20 people coming in per hour and there's no air conditioning in a building in San Antonio on Memorial Day weekend, their sales are going to go down. So if I can get my HVAC guy there and get it done faster, they're back in business faster. That's not every landlord. That is me though. I like to jump in and keep them operating. Because we get along so well, whenever he asked about buying the building, I'm like, yes. And also, this is significant actually, he's not bringing a team of attorneys from New York City. It's going to be me and him that pencil it out. And that works well for me. If he's like, well, let me bring in Jackson Walker and I'll be like, yeah, you're not worth my time now. I'll just keep the building because I planned on owning it forever. Know your landlord. This is a big one that I was going to say, and I try to explain it to friends, clients, anybody that asks. If you look at what your leasing broker makes and say, well, gosh, you're going to do this 10-year lease, and I'm the landlord, I'm going to pay you $120,000 commission for what you see as 6 months of work. But it's 20 years of knowing the market, knowing the players, knowing how to deal with the landlords, right? Because one landlord doesn't act like me. They act differently. You've got to know all this in tenant leasing in Austin, and I'd say any market, because knowing how that landlord's going to react to your letters of intent and all of that dictates how you write that letter of intent. You might have a template, but you should adjust it accordingly to the market, to the landlord, to all the factors. You do have to go back and educate your tenant, your client, why you're doing this. But that's the value we bring. I mean, enormous value. Also off market. We know what all the landlords own. And a lot of stuff never goes to market. on purpose. So you've got to have a direct line to that landlord or their broker and say, I see that this is going dark, whatever it is, can we get a shot at it? So it is decades of experience that gets you that $120,000 commission in 2024. It's not the work in 2024. That's just your little cherry on top. Do I have any questions?
Well, I was going to piggyback on that on landlords in smaller markets.
Yes, please.
Also, getting to know your landlords in the smaller markets versus the larger markets, because your smaller markets aren't as sophisticated, and they're very simple, and they're easy to work with. They can tend, because they're looking for the warm bodies. They want to fill the leases, so they're a little bit more flexible on all the terms.
And you can take advantage. But also know who you're playing with. So if my LOI is going into HPI managing a large building in downtown Austin, my LOI might be 5 pages long because I'm going to detail out everything. But if it's a small retail space in Georgetown, they're getting a little more sophisticated. But Taylor, Texas, I would dial it back to maybe 1 page, right? Know your audience, play to that audience instead of expecting them to play to you, because commercial is not emotional, but it is. Who else has a question?
I guess going back to what Jim was saying about responsibilities, tenant responsibilities, landlord responsibilities, and then having I know we were talking about putting caps on escalations in market, but what about, I know landlords responsible for structural and stuff like that, as far as like HVAC goes, that's a huge one with almost every single LOI and lease. They're like, we don't own this space. Why would we pay for a $24,000 HVAC system? So, and I try to put caps on that, whether it's just service or replacement and everything. So how do you guys approach that?
So what I like to do in that regard is when I'm submitting an LOI, I like to include a provision regarding the HVAC system in that LOI that asks the landlord to define what the HVAC system is.
Okay.
So how many units do you have? How many tons is it? How old is it?
Right.
And so they usually don't know any of this stuff off the top of their head. So they're going to have to go send somebody to go figure it out. And so I usually include language in there that says if the unit is over a certain age, that the landlord's going to provide a guarantee or a warranty of some kind.
Okay.
If it's under 7 years old, then maybe my client takes the risk on that, and we roll the dice there. But probably have an inspection done as well.
Right.
But so what they end up doing is the landlord goes out and they do their inspection. They come back and they say, this unit's 18 years old and it's, at the end of its lifespan. And I say, great, we don't want a hot potato, so why don't you warranty this HVAC system for the remainder of its life, as long as it's up and running well, and then replace it when it dies versus replacing it now. And so a lot of times I'll get landlords that'll be agreeable to do that and be responsible for the HVAC. But then once they replace that HVAC system with a new unit, it generally falls on the responsibility of the tenants at that point. But that, gives an opportunity for landlords to not have to replace an HVAC system that is working. That's an older system up front. They just provide that warranty, and then we move on down the road. And sometimes that can be a hindrance to getting a deal done because people don't want to pay $24,000 for that new HVAC system.
Yeah.
They're not buying the space necessarily; they're leasing it.
Yeah.
Is there a central clearinghouse? So like if I'm representing a buyer, there's a mortgage pre-approval, so it's very clear what they can afford. Is there that same kind of approval process or a central clearinghouse of like, this is how much my tenant can afford, this is the price point? I understand it kind of varies by landlord, but in directing a tenant to, hey, this is how much money you need to have in the bank or have access to get approval for XYZ, is there any kind of like per square foot formula that exists out there either for you particularly or the landlords in general? Is there like a central, like you're pre-approved kind of entity that does that on a tenant basis, or is it landlord by landlord basis?
Oh, I can't wait to talk about this. This is my favorite thing. Okay, so all landlords are different.
Yeah.
Some of them don't even bother looking at financials. Some of them will run a credit report. They're like, okay, this is good. A lot of them, and I'm not sure this is 100% fair, but beware, they'll rely on their landlord rep broker. They think the broker's done the due diligence. That no, it is the owner's job. So if I'm going to do anything longer than a year, 12 months, I'm going to review financials. I'm a bank. I want 3 years of income tax returns on the business. I want 3 years of personal income tax returns, and I want P&L for the year that it's not run, so 2024 now, or 23 if they haven't filed yet. Balance sheet, I want to see what you got, and personal financial statement, which they make themselves. That's the first thing I'm going to look at. If it looks like you lied, you're out. I don't need you to overvalue your business. That's very cute. That's a red flag. That's a red flag. The next is, their income over 3 years. Has it been steady? Great. That immediately right there, steady income. They've been in business 10 years. Fantastic. Also, I'm asking them to personally guarantee. So they're agreeing to that. What they can afford, gosh, I would say in office, an easy thing is, are they leasing an office somewhere else? What are they paying? Which is very much kind of what they do in residential mortgage. If you're paying this much in rent and you've been doing that for 5 years, you can probably handle this mortgage. So there's that. There's another factor that I love, and I learned it from Beth Azor, and it's called healthy rent ratio. Healthy rent ratio is based on gross sales. It's really good for retail. So healthy rent ratio in restaurant bar in Austin, Texas is 10%. So if they're grossing $2 million in sales, it's a gross sales number, then they can afford $200,000 in rent. Right. Give or take, right? They might have a different program. They don't want to pay that. They may feel like they can make more, but that is significant. That's really kind of how I've started judging everything. And this is the fun one. And bless their hearts if they're watching, but they know because it's happened to them. So I'll say how I figure out what you're going to pay whenever you extend, because I've got your financials. So whenever you say, oh, I've enjoyed my 10-year lease, I'd like to extend 10 years and I want to pay this, I can run your financials. I know what you can afford. And this is market and you're going to pay it. And then whenever you say, I can't afford that, you're lying to me.
And this is why I want a renewal option at a fixed rate.
Well, I always put renewals in.
Okay. Do you?
Yes.
And what do you ask for?
Minimum 5 years, like 2 5-year options, typically, depending if we're already in a 10-year, then I'll ask for a 10-year renewal, but at least 2 options. But yes, I will typically do market rate with a caveat, depending on where the market's at. So yeah, it can't go through the roof. Like, yeah, I put in market rate, but yet that's still kind of negotiable.
How do you put that in wording? Market rate but negotiable? Because who gets to decide?
Well, and it will come down to, yes, we still get to renew, but depending on no more than 5%. I think one time I put no more than 5% of what we're currently paying.
So you could account the percentage
Yes.
as far as you can say you can increase it up to X% as long as it's below market rate.
Yes, like our last year, we're paying X, no more than 5% over that.
I think it's a fantastic. If you're on the tenant rep side, put it in. If you're on the landlord side, we will always mark that out. Absolutely not. In 10 years, the market will have changed, and I'm going to take advantage.
And it could go worse. And
then it's a bonus.
It's a disadvantage to the tenant if the market is dropping, because now we're at a higher rate, and will the landlord even do a lower rate?
So do you build it in then in order to appease the landlord? Do you build it in, hey, we're going to go up to 5% over, and if market goes down, we're going to go down only to 5% because that's where
I tried to. That's a tough one. Most landlords will mark that out. Yeah.
We want to dictate.
Yeah.
So seeing like key fees or buyout fees with certificates of occupancy for bars and restaurants?
Yes.
I was gonna say I don't have.
As a landlord, I would love that.
Yeah, I've worked. It's been a hot minute since I've worked with bar and restaurant, so that's
Yeah, I mean, if you've got something of value, I'd expect key money for it. Yeah.
So you should offer it, or you're going to wait for the landlord to ask? Because you didn't offer it in our last LOI.
if the tenant wants to vacate and then they get paid as opposed to a sublease. So if I have a tenant who wants to take over an existing business and the license, the ABC license, they pay the key fee to get it transferred, so there's not an overlap in the TABC licensure.
It usually generally depends on the condition of the space as well, and getting furniture, fixtures, equipment, things
Yeah.
like that come with that key money.
And that's more tenant to tenant. The landlord's not in that.
Correct.
Well, they don't have
But
to approve it.
wouldn't you approve though as a landlord?
You would approve a
Well,
sublease.
I would approve the sublease if they're subleasing.
Right.
Yeah.
Yes.
Yeah, but it's not a
on a
guaranteed
purchase.
sublease if there's a key fee. It could just be a whole new.
It could just be a new purchase.
Lease, yeah.
So, and in that case, the landlord's typically reviewing financials for the buyer.
Of the buyer of the absolutely. So that is the catalyst of all of this again was Lee calling me because he wanted to sublease. And he was startled by the amount of money it was going to cost. And I explained to him, okay, well, landlord's got to review your lease and then the sublease. Now, your subtenant's going to come in and they're going to pay the rent. But what if they stop paying? And Lee, do you realize you're the landlord in that situation? And he's like, no. I said, so have you reviewed this tenant's financials? He's like, I have not. I said, well, you are really taking on, you're going to pay for this person to sublease from you. If they stop paying, if they tear up the building, any of that happens, you're on the hook. You are now a landlord and you need to review your lease document and the sublease document, each of them about 50 pages, each 100. He's like, oh my gosh, I think I need to get an attorney. I said, you're starting to see where these fees add up. This is very expensive. This isn't just, sub one in, and this is all great, especially for a landlord. This is a very big deal, and I don't know that everybody understands it. I even know landlords that don't. That building, I am liable for. Everything that happens in it, I am liable for. If you bring your Pomeranian to the office and it bites a child, okay, they're going to sue the tenant first. But let's assume tenant doesn't have that much money, has a house, can't take a house. Guess what is not protected? My building is not protected. They will sue the tenant because they have to, and then they're going to sue the landlord. We are in an extreme liability situation. So we might come off as ogres, but it's really us protecting us. And the benefit, all boats rise with the tide, I'm protecting my tenants. I'm keeping them out of trouble. They might not realize it's a bad idea to do this, it's a bad idea to do that, till I shut them down, which, by the way, I forgot to get something yesterday. Because they don't think through what could go wrong. And I have to think about what could go wrong because that asset's not protected. And the number one thing my husband taught me, so all of our buildings are owned in different LLCs. Those are owned by LLCs and they're all owned by trust. It's as protected legally as you can imagine until someone dies. They're all pierced. There's nothing that is protected other than my home if someone dies. People die. People die. Somebody slips on a banana peel, breaks their neck, they're 80 years old, right? Who are they coming for? The landlord and everything they own, and they can pierce all those protections. So landlords are strict and stringent for a reason. If they're not, yay for the tenant, take advantage, do a lot of deals with that landlord.
On another note, and this is another reason why it's so important to have a broker representing the tenant that is experienced and understands all this, where some people don't want to get a broker involved because they think they can handle it when it's actually not a good idea, which is where our value comes in.
I think a lot of the times when I'm trying to structure deals, it's just presenting a structure of a deal that I can present to a landlord and sell them on an idea or a concept. Like, here's the plan on what we're going to do for the space. Here's how we're going to finish it out. Here's what they're going to do. Here's how we're going to pay for it. And just kind of painting them a really clear picture about the ways it could be, and seeing if they're responsive to that, if they have the same type of vision. So, and if you do that, I see a lot of success. Without that, there's sometimes I get, offers that are made and they're so lacking in information that we just completely ignore. We're just like, we're tossing this one. They don't have enough, they haven't done their due diligence yet to make a reasonable offer. So having a strong LOI really helps get a deal done.
And they're not working with an experienced broker.
Yeah, and they're not working with an experienced broker.
I've dealt with that.
When you get these LOIs that don't contain all the information that they need to get the deal done, it usually doesn't move forward.
And we'll get to next average rental rates and vacancy. This is huge. We're going to have Jim speak to it. But this is incredibly significant in Austin, Texas, if not across the United States. Retail is the, shiny bauble. Vacancy is low. Vacancy in Austin, Texas is 2%. So if you have a tenant that wants retail space, you are fighting tooth and nail to get it. The landlord sits and looks at all of the LOIs, right? So put your best foot forward, send it with financials, send it with a vision. Don't ask for a 5% cap on that option, because I'm already going to be annoyed because the one that doesn't ask for it, again, I'm not emotional. Oh, I like this one. That is significant. You can fight for your tenant, and that's phenomenal. But if you're in a fight against a bunch of other tenants and they want the space, you got to play against that. Protect them the best that you can, but put in all the goodies so that the landlord chooses you. That's what you're doing.
You definitely need to recognize the market, and understand where you're at in the business cycle. With retail being at 2% vacancy, beggars can't really be choosers. A lot of times we're having to put people into brand new construction, and the stuff that is available on the market, it usually requires a lot of construction just to bring it up to code.
Oh, construction. All right, should we talk vacancy rates or construction?
Your call.
Okay, well, let's go vacancy rates. So, vacancy rates in Austin, Texas. I said that retail's at 2%, give or take. Would you agree?
I'd agree. Yep.
Yeah. Restaurant is at 0.
Yeah.
Pretty much. It's hard to really find second generation
As a especially
restaurant
second
space.
gen, terrible.
What about industrial and office? I do not know.
Sitting around 6.5–7% vacancy citywide. And so it's still doing well. There's new construction that's coming on for industrial that's causing vacancy to go up a little bit. But we also have a ton of warehouse industrial users moving here that are taking a lot of this stuff up. So industrial space is still doing really strong with retail. Office, on the other hand, when we include sublease space, we're looking at 22% vacancy rates in our current Austin market. And so there's a lot more room to negotiate with office space in this market than there is with retail or industrial space. So just knowing that when you come to the negotiation can go a long way.
Yes. Oh, my. Are you seeing the same thing? Same vacancy rates?
Oh yeah, I was gonna say a little higher in office, but
Where do you think it is at an office?
I was gonna say closer to 30%.
A lot of the space that's on the market is big block space. And so even though we have so much vacancy in the office market right now, when I get small little 1,500 square foot, 2,000 square foot office users, we don't have a lot of options like that in the market. And so it's an unusual animal just because we have such big blocks. The person that comes here is going to be taking big buildings, full floors, things like that to make a dent.
Yes. And so I will say on that again is nuance. You got to know the market. You have to know what's really going on, macro and micro. Because if you come rolling in and go, oh, well, office is low, I'm just going to lowball all these landlords so I can get office space. You might be wrong. Because anything under 10,000 square feet is leasing up pretty quickly. So whenever a landlord gets this, super low ball, do all of these things, we throw it out the window. Just because you read it in the USA News that our, occupancy in Austin, Texas is 80%. Nobody's going back to the office, all of that. Well, that doesn't necessarily equate to 3,000 square feet in Georgetown. In fact, it doesn't at all. So know your market, know your landlord, know what's going on, where we are at in the cycle. That's a huge one.
Does that drive landlords to being like 2,000 square foot spec suites?
Yes.
Yeah, I think that when we have large blocks of vacancy in a building, you will start to see smaller spec suites that get built out from those spaces. But that takes time too. And there's a lot of landlords that are probably sitting on the fence thinking about that right now is whether or not they should spec out some of their larger spaces. So maybe it's just a floor to start out with. But I think it'd be wise for most landlords to do that. Yeah.
And I would say that also too, some of these larger spaces, the discussion of the redevelopment, they're talking about trying to turn those into residential because of the vacancy, the the reuse.
We're speaking specifically about office.
Yes, specifically office, and your big office buildings that are 10 floors vacant. And so, but the cost of that is extremely high.
Our utilities are individualized.
Exactly. And you got to move the
You have
utilities.
to redo the structure. You got to do a bunch of stuff, fire code, everything.
So
It is
that's-
cheaper to tear the building down
Yes.
and start over with multifamily. That's why it's really not going to happen at any large scale. I think that CoStar put out it's 5% of the office market in the United States can or has been converted to residential.
So when you're specking out, like if you did have a large building, you're specking it out. Since you can have someone individually pay the utilities instead of big building, do you then do when they're writing a tenant? Are you basing it on the square footage? They use square footage, and you're doing a percentage of what the cost of utilities is.
You would in a typical office leasing scenario. In residential, ideally you have everything sub-metered.
But if you can't have it sub-metering, now you're specking out individually to do it.
For residential or for little offices?
For offices,
Yeah, you would just, it's per person or share of utilities.
By square foot.
You could do common load factors. Then there's gross up lease. Do you see gross up lease very often?
Yes, I can. I mean, I typically only see that in office leasing.
I know. What? Okay, explain to me the gross up lease. It grosses up as if it's 100% occupied.
Or 95%, just depending on the language. So, and that's really language driven.
If there's a 10,000 square foot office building, 50% of it is occupied, the other is vacant. How does gross up lease work?
On the tenant side, I only want my tenant to pay for their pro rata share, and so I want the landlord to pay for that vacancy. I don't want the landlord to pretend like that space is occupied, and then pass those costs along to my tenant because it's not.
But in a gross up lease, they get to.
Yes.
Yes. So gross up lease, you got to really.
And so I would probably strike a gross lease up provision within a lease that I'm looking for my client.
As a tenant rep, I would. Yes, especially with office as vacant as it is, whether it'll stay that way, I don't know. I don't have a crystal ball. Construction, I will say from a landlord's point of view, doing spec suites is brilliant, and I have done it. I started doing it in 2020 during COVID because it made the most sense. I did 6 and 12-month gross leases, and I was 100% occupied, still am. Very easy. Not a lot of landlords can maneuver or want to deal with that short of leases. The other problem is, let's say I've got 1,000 square foot space and I go build spec office and I spend $100,000, okay? And tenant comes in and goes, oh my gosh, this is beautiful. And I'd like $500,000 to do what I want. So you spent all that money that then gets ripped out for the next tenant. And it's hard to judge where to go with that, honestly. In a perfect world, you could say, I've built one spec suite. If you like this, I'll build it over here. But construction timelines aren't that fast, and that might take 3 months minimum.
Materials and labor is cheaper to build it all at one time versus in phases. So you're going to pay more on your materials.
Yes. So there's all those caveats. Like it seems like a brilliant idea, and it might be, but landlords are pretty hesitant to do it because you feel like you're putting capital into something that's just going to get ripped out.
There's been lots of times where I've spec'd out spaces on the landlord side where, we come in, we've painted the walls white, we put in some brand new blue carpet, and then the tenant comes in and says, well, I need my company colors on the walls and we need tile floor here. So you end up just ripping all of that stuff out, and it turns out to be a big waste of money. And it's more often than not.
Yeah, but that's also marketing cost. You got them in here because this looks like that.
Yes,
Obviously,
and
they weren't there before.
that is true. And there's sometimes you can create a small like model home spec type space that can sell other spaces that haven't been finished out.
Yes, and I do think that, and actually, there's a podcast I did, speed to occupancy. So a lot of the larger office buildings have like the spec suite, and then they've got a set of 6 different furniture styles that you can pick, and swatches that you can pick, and this tile, this, so that they can sign a lease with the tenant and deliver that space in 8 weeks. And I think it is working really, really well. I think landlords of very large buildings, that makes perfect sense for. And if I were a landlord rep and I was out trying to get more landlord rep assignments, I'd be out beating the bush on that one and telling them, look, you sitting around waiting for your 10-year tenant to come along like it's pre-2020, those days are gone. And every day that you're vacant, you're losing money. I also, as a landlord, tell everybody, I want my buildings occupied because if there's humans there, all of my systems operate better. And if something goes wrong in that building, there's eyes on it. So if I have let's say I own this building that this restaurant is in, and it starts to leak over there, if this space is vacant, that might leak for weeks or months. And I don't know as the landlord. But if this tenant, East Austin Hotel, or this is actually Second Bar, calls me and says, DeLea, we've got a leak. Well, I got my guys over here to repair it much faster. It's just better for the building. So I don't know that all landlords think that way. I think there is a huge significant difference between buildings owned by, personal landlords. It's personally owned, it's part of their family assets, or family owned versus owned by a very, very large conglomerate. Would that be called a REIT?
Or investors that, yeah.
A bunch of investors, because they might have asset managers that really sit in the office and crunch numbers. I personally believe that commercial real estate is about the building and the construction and the materials and all of that. The numbers will follow if you take care of those things. But as a tenant rep, just know that there is an opportunity, because they don't go out and look at that building hardly ever, if ever. They rely on their landlord rep to do it. Well, I mean, how sophisticated is their landlord rep? And I know this because I run into tenant reps, and I do buy commercial real estate. So the seller's broker will say, it's got this, this, and this, and they don't understand that everything they're saying is wrong. They're not in construction. That I understand. My personal caveat is, don't say it if you don't know it's true. Just leave it. Don't tell me you just put a great new roof on it. I actually know that's a terrible roof, and I'm going to have to replace it. So I'm not paying for that. However, there are plenty of buyers that don't know it's a bad roof. So not everybody's going to cater to me. What are rental rates? What are rental rates retail, Austin city limits, not Land or Buda Kyle?
I think most retail rates are probably falling into about the $25 to $40 a square foot plus triple net range in the Austin area right now.
That seems
What-
low.
25 to 40?
Mm-hmm.
Well, on average. There's certainly areas like the Domain or Belterra that can exceed those areas. But that's what I'm seeing on average.
South Congress is what?
Yeah.
Depends on which part. I mean, I think they eat.
moving out because they can't afford
They inked a lease, and I don't know. I can't remember if I even know who it is, but there has been a lease done there for 200 a square foot. So 200 a square foot.
This week
Yeah.
that said a big corporation is coming at 225 a square foot.
Yeah.
Yeah.
Y'all know what type of use that was?
I believe the one that I'm thinking of is retail.
Yeah, retail.
Retail.
About office space or
Retail.
Retail.
Retail. I don't think that office space is anywhere near 225 anywhere in Texas.
I'm
sorry, I don't know.
For ranking 25 to 40 would be more.
Is that for retail?
Also retail.
That's just retail. That's not office.
She's coming in.
And you don't want to touch on the outer right now, Maynard, the brand new development that's being built with the HEB, $40 a square foot base rent.
In Maynard?
In Maynard.
Yes. 40, that's their list price. 40 to 42 square foot.
Mm-hmm.
Oh no, they're
No,
getting it.
they might, yeah.
They might, but
It's healthy rent ratio.
those businesses try to stay in business.
It's healthy rent ratio.
Yeah, and they're targeting your, bigger retail box. Well, they've got Home Depot, they've got HEB, but then also, all the companies that follow HEB, all of those people are definitely signing leases. Your liquor store, what is it?
Yeah.
Twin Liquors, and
Yeah.
usually, there's usually a Starbucks, but Maine already has a Starbucks. But yeah, there's a Chili's that's possibly going in out there, and they're doing site, pad sites. So
Rental rates continue to creep up, a large part just because cost of construction. So, with the way construction's going and inflation, I expect that to just continue to be the trend.
yeah, and I know in Pflugerville right now, a new retail strip that's right there on Wells Branch, they're asking 30 to 35 base rent.
Pflugerville.
Retail.
Wait, retail. That makes
all
sense there
retail.
for retail. And another significant factor is this. You can look at that base rent, but really what matters is I call it all in. So it's your triple net plus your base. Because you might have an exceptional landlord like myself that keeps my triple nets half of what others are. So my rental rate can be higher. And I can explain it to you. So that is a significant one. I think most all tenant reps in an LOI will ask for, your triple net estimate. Pay attention to it. You can offer, your market rent and say, well, it's 42. Or let's say you come in, you're the tenant rep. I'm asking 45 a square foot and I got $10 square foot triple nets, which normally they're about 20, 25. And you're like, I would like to pay $30 a square foot base rent. And I'm like, and I'm all in at 40. Have you lost your mind?
And that's what's happening. Well, actually, out in Maynard, they're predicting $8 for triple nets. Oh, maybe the first year. After that, it's going to triple once it's all built out. And that's it. If you don't have an experienced broker representing the right tenant, they think they're getting a great deal at $8, and then they're going to get hit in the next year of triple that. So now their full amount in is 3 times as much.
So I would hope as a tenant, this is why if you are a tenant, you use an experienced broker because they can pencil out those triple nets and say they're wrong here, here, and here. Number one, property taxes, that's the big one.
And
Also, insurance is doubling. Insurance is doubling, period. It does not matter that Central Texas hasn't had a natural disaster. The way insurance works is they spread it out across everybody. So if something happens in Florida, it affects us. And we are having more chaotic environmental events, weather events, more chaotic weather events. Insurance is going up and it might just continue. So it's doubling.
But they're always about 2 years behind. Insurance rates don't catch up for about 2 years. So what happened 2 years ago, we are now starting to pay for. Another thing, I was just at NAR when I was in DC, theft is another big issue. Theft and vandalism is increasing insurance rates.
Insurance rates, and it increases common area maintenance, CAMs and your triple nets. So your landlord will go take care of it. It gets passed through to the tenants. That's not necessarily a bad thing. A landlord that takes care of the building is a good thing.
Yes.
Period. But it's knowing those triple nets, if you're representing the tenant, that they know what they're getting into. I always said, I have not represented tenants in years. Can't protect you from everything. The best I can do is tell you what's coming at you. That is what I can do. Period.
As a landlord rep, talking about like the theft insurance, I mean, it's ultimately their job to get insurance, but how do you as a landlord rep also prepare your landlord to say, hey, these are what we're seeing across, it's 2 years behind. as far as the conversation, here's what you're going to come start seeing in insurance, so that when you do start doing, I say the triple nets, different like that, granted it's built into the tenant, but what do you do to prepare the landlord on their side?
I would like to think that a landlord rep has a great communication with the landlord and maybe just lets them know, sends them articles, say this has happened on 3 of our properties. It's more of a FYI. If a landlord rep wants to do an excellent job, the landlord rep is usually the one that estimates the triple nets. Estimate them correctly, it's kind of up to you. That's a game. So landlord reps will generally underestimate
Well, but you'll do
on purpose.
Yeah, you'll do a reconciliation every year, and if you can follow the trends over year on how, prices have increased, you should be able to kind of predict somewhat of a percentage of increase.
Who?
The landlord.
The landlord
Yeah.
can.
Yeah.
Doesn't mean they're going to let the world know.
A good broker should be asking those questions.
Hold on. A good landlord broker or good
Or
tenant?
rep broker.
Oh, yeah. The tenant rep broker shouldn't ask the questions. They should go figure it out.
Yeah.
Landlord doesn't have to tell you anything.
they don't
They're
have
going to, here's my history.
Yeah.
Yeah. You're not going to get a landlord to be like, oh, you're right. Let me redo these for you.
That's back on the relationships too. If you build good relationships with landlords, they'll be more willing to work with you.
That's true. There is some truth to that. Yes. If you called me out on it, I would be truthful. But to the rest of the world, no. No.
When it comes to Austin with insurance, I say to, like, so being a tenant rep and knowing, hey, here's what's going to happen with insurance going up. Are there any cities where Austin follows the trend? So like we're a year or two behind. So like when we see an increase in like LA, is there a city that Austin out there that is almost like a model that comes in after? So they talk about music hits New York before it hits Texas. Is there something that way as far as insurance or like trends that you start to see early on in like commercial real estate, as far as even insurance that might start somewhere else and come to us next? Like for residential, we're seeing what's happening in California is now happening in Austin. Is there any correlation?
I'd say insurance is nationwide. Yeah, it's not specific cities necessarily. I mean, yeah, sure, your insurance rates might be higher within a city, but their rates are a nationwide because most of your insurance companies, they reinsure, and so they deal with those types of rates. And
okay, so I just wasn't saying if you typically see those happen sooner in California and then it trickles down and then we see it like 3, 4, 5 months later. It's just happening simultaneously.
I'm not sure that correlation exists. Also, I
Yeah.
don't think most investors care about insurance rates since it is a pass through to the tenants. It's more of an annoyance to the tenants when their monthly rent goes up. And it just makes it that much more difficult for them to be able to pay rent.
Well, but if they're sitting vacant, they're paying that
Well,
insurance.
yeah,
There are plenty of landlords like me that are very, very proactive in watching what's going on in the market and what's going to happen. And I am adjusting. So I know that if my triple nets are going up, then my base rent can't go up what it normally would. Right. And I personally, somebody asked me, actually on Twitter, do you zig when others zag? Not because I want to zig when others zag, but I want to be ahead of the curve. So if I figured out insurance is going up and property taxes are going up and I lower my base rent and I stay occupied where the other landlords lose theirs, that's what I did during COVID. I redid everything within 8 weeks. There's still landlords having to unwind things from COVID. So I zigged when they zagged, but not by nature, like, oh, they're going that way, I'll go this way. I want to be ahead of it.
Existing leases or just new ones coming in?
New ones coming in. I mean, as a personal landlord, wherever I say personal, one owner versus Blackstone, I could decide to relieve my tenant of some rent. I could. What I did during COVID, I had 2 tenants. Well, let me say, all the tenants came and said, we want free rent. Our neighbor's getting free rent. It's on the da-da-da. And my number one question was, great, send me your financials. Crickets. I'm like, oh, you want money out of my pocket, but you don't want to show me how you're doing? Because a lot of businesses did better, period. So I had about 3 that sent me their financials, and we gave them not rent relief, but I did allow them to pay 60 days late. We gave them more time, but then they caught up and they went on. 2 of them I can't remember if they sent me their financials. It was they're like, we need rent relief and we need to lower our rent. And I said, you need to get gone. So I actually had them buy themselves out of their leases. I'd rather be vacant and finding a new tenant at lower than stringing along a tenant that's struggling. When you start to have tenants struggling, it could go from bad to worse. And I don't really want to be in that boat with them.
And then you get attorneys involved, and then yeah, it becomes more expensive sometimes.
Yes, it could get very expensive.
Yeah.
So it's mostly new. The significant one is I signed up our lease in East Austin, and our triple nets are 11 a square foot, and other competition space is $20 a square foot. So we got higher base rent because there were people that called and they're like, well, your base rent's higher than everybody else's. I'm like, my triple nets are half. Look at the gross all in. Look at the all in. And I'm like, oh, this isn't my first rodeo.
So going back to like the insurance, do you have the tenants put you as a landlord as an insured on their policy? Yes.
Yes.
Additionally insured, period. Additionally insured is significant. Do not forget what I just said.
Yeah.
Additionally insured means anything that happens to that policy, the landlord gets alerted. Most tenants will, and it's not that they're trying to do it. Their agent, their commercial insurance agent, will put it as certificate holder. That doesn't mean anything. It means they sent me a copy. But if they stop paying that policy, I have no idea. Additionally insured. And I think it's in all standard Texas Realtor forms. Additionally insured. I don't know. I know. It's a good one to look at.
Yeah.
And then also since COVID, have you added any more clauses into leases for natural disasters or anything like that?
No. If I remember correctly, force majeure did not apply to COVID. And I knew that pretty early on. I had a friend through Crew Commercial Real Estate Women that works for a huge insurance company in New York City. And she told us on a call probably 8 days in, force majeure won't go anywhere because it would bankrupt the insurance companies and take down the country. So as everybody's running around like, oh, force majeure, I knew it would never pencil out, so we just let that go. I have seen LOIs come in that if they are, especially retail and especially like fitness. I had a fitness LOI come in where I was a landlord and they asked, if they were shut down this much time that they would be relieved of rent. I'll play with that. I'm not saying I'm going to agree to it, but I understand the concept. It depends. I think it's significant to put in there because could another black swan event? I haven't seen other impacts other than that.
I saw like one little one where the tenant was from even like the ice storms, they were responsible for the sidewalks outside. Like if the ice storms came in and ruined all the sidewalks.
Liability.
Yeah. I'm like, okay, sure.
That's huge. That's a really good one.
Yeah.
Why not put it in? Did the landlord put it in or the tenant?
That was like I think it was a landlord's like attorneys. We had that in there. That was interesting. I was like, oh.
I'll tell you why. Liability.
Oh yeah.
So if they don't ice it and somebody falls, it falls on them.
Yep.
Absolutely. That wasn't to be nice or anything other than push. Again, somebody dies, everything's out the window. But that's a great one, especially like me, if I own a little standalone, I would have thought to put it in because I would hope that my tenants would do it. But it is a very smart thing to put in so that they do. One thing, I think it's pretty standard in the Texas Realtors form, but I get a little detailed on HVAC maintenance because the tenant is usually not for a big office building. Single story, freestanding retail building, 3,000 square feet. Tenant's usually responsible for HVAC. When I get an LOI from tenant rep that says, we would like you to warranty 5 years, I'm pretty much okay with that because what I'm doing is I'm warranting what the previous tenant did to that system or age. But after a certain amount of time, if it fails and it's not age, it's because the current tenant didn't take care of it. Tenants forget. So in Texas, you should have your HVAC system looked at and serviced once a year, changing the filters twice a year minimum.
Usually those HVAC warranties come with caveats that you have to have it serviced so many
Right.
times per year, or else the warranty
And
is
you have to
void.
have record of it too.
Yeah.
Yeah.
And tenants should want to do it. I do know that they get busy. And this is where I'm the stay and pay landlord. I will send everybody. I deploy out my HVAC guy to go do all of the tenants. I push it through on their triple nets. And here's the reason why. I do this day in and day out. I can get it done faster than they can. It's done better, maybe, probably more price conscious just because I'm doing it a large swath. I know it gets done. It's a benefit to them. So I've said this lots of times. My tenants think I'm pretty tough on them until they move out and they miss me. I get called by tenants all the time when they're gone to help them with stuff because they realize I did it right, always. And sometimes right is better than, shooting from the hip or just neglecting. Sometimes landlords will neglect tenants.
I say I had a tenant situation. They'd been in their space for 3 years already. HVAC went out because of the relationship that the tenant had with the landlord. They split the cost on the HVAC.
Like say they have
And
a 5-year lease.
and yes, there was still 2 years left.
Yeah.
And they allowed them to pay it over 12 months.
Yeah.
Oh.
Because that tenant had been paying on time, had worked with the landlord through COVID, built a great relationship, and so the landlord was willing to work with them.
Yeah, that would be huge. You have a 5-year lease.
Oh.
The HVAC goes out on
Yes.
year 4.
Yep.
I have to purchase a new HVAC for 1 more year.
Yep. And now we're getting ready to renegotiate the lease because it's due the end of this year. I think those negotiations, and I know the retail market is tough, but I do believe that negotiation is going to go well. I'm predicting because of the relationship we have.
Good.
I think they're going to be reasonable.
I have another question. Going back when you were like zigzagging and your base was your base was higher, but your triple nets were low. A lot of times when you see spaces advertised, it'll say base rent plus triple net, but the amount is not there. So when you were doing that, if people were to see the base price, yours was much higher.
I'm the landlord that puts it all out there. You've got the survey, you've got environmental reports. I mean, I put it all out there. Honestly, I get a lot of calls and emails. I'd rather you weed yourself out. If it's not going to work, don't call me. That is my process. Everybody's different, and Jim's is 100% the opposite. He can explain his process.
Well, I just take every call.
He likes all the calls.
He likes his phone ringing.
Yes.
I like my phone ringing. I don't like to be bored. So
This is significant. Another thing, not only does experienced brokers know the players in the market as landlords, they also know the flavor of the other brokers they're trying to work with. Okay? He loves the calls, but he gets a lot of calls. And let's say at the end of the day, he's got 5 calls to return. He has time for 2. Who's he going to call back? The people he knows, the people he's done business with, the people he's made money with. It's a problem for people trying to break into the industry, I know. But if you do your due diligence and you figure out he likes phone calls, they're trying to get a hold of me because I've got, CS1 bar on 6th Street on East Caesar. If you know this about me, you would know to email me. Email me. I don't take calls. If I take a call, it's usually an attorney or my client, and that's about all the time I've got. But I can email, and I can email you everything you asked for. Everything. Also, this is me on my little high horse. If you're a tenant rep broker and you're interested in my space and it's highly competitive, bother going to my website, looking at all the information I already gave you. If you ask me questions that's on my website, I will never respond. I'm one of those on Twitter that everybody complains about. They don't return calls. You probably shouldn't ask me what the triple net estimate was because it's on my website and LoopNet and CoStar and heck MLS. You didn't bother reading. That's not my problem, and I probably don't want to work with you because you're lazy.
sometimes I just like to confirm that the people net is.
But couldn't you put, I see on your website, it's this. Is that correct?
I could. But I also might just ping you an email that says, hey, can you confirm your triple nets?
But okay, but here's the problem. Here's the problem. What if I have 50 listings? Now I got to go look it up.
Gotta go look it up. Yep. So, but that's one of the pieces of information I need before I can generally move my stuff
Absolutely.
forward to the next step. So, all-in approach, we're looking at base plus triple net, and so it could be that I just need that piece of triple net information before I send you
I
that offer.
know.
So,
Which is a good thing to put in that communication. I've got an LOI I'm sending.
yeah.
That'll move me along. That'll move me along. I'm like, oh, what was it?
And piggybacking on what DeLea was saying with communication, like I'm someone that can generally be reached just about any time through text message, especially if it's a quick question. And the way we've got everything set up to where when people ask for property information, we can text them like a web page that has all the information really fast. And so if you're somebody that I already know that's reaching out late at night just trying to get some basic information that I can shoot you real fast, I'll do that all the time. But if it's somebody that I've never met before and you're going to make me sit on the phone and chit chat with you, well, I'll talk to you tomorrow when I'm back in the office. So,
And text messaging. I hate text messaging. It's very funny because I thought of it as he was talking. Not only do you need to know the flavor of the landlords in the market, how they like to interact, but how their landlord rep likes to interact because they're the go-between, right? And a lot of times we teach the clients I work with, they do it my way because that's how I do it. So they understand, like, okay, and they my clients know to email me. You email me, and here's what I'm going to tell you why. If you need me, you call and text, and I know it's an emergency and you will get me immediately. So do not cry wolf. Don't be starting to text me about this and that. Another thing, and we'll see, this might actually make it on YouTube. This is important for women. And this is in my opinion part of women growing in presence in commercial real estate. I have a rule. I don't text any men other than my husband after 7 p.m. So I do not want to have a texting relationship with my client that might be a man. What if he's married and he gets my text at 11:30 p.m.? Oh, yeah. Not going to like it. And I'll tell you why I know this. One time, one of my clients texted me at 11 p.m., and my husband looked over and said, "What is so and so doing texting you?" Didn't matter that it was business. His first question was, "Why is a man texting you at 11 o'clock at night? It's inappropriate." So that's my rule. I don't break it. I highly recommend embracing it. You don't have the problem. I mean, well, unless you're dealing with a woman. But I can email you at 2 a.m. No one's offended.
I'll answer a real estate question at 11 p.m.
I know. But
Usually
could
the kinds of
email.
questions that I get through text message are quick questions. Like if you want me to really go into depth, then that's going to probably be better in an email format or on the phone the next day.
But I do like a text that says, check your email.
But if your question is like, hey, can you give me information on this listing? It's just, ping, there you go, enjoy. Here's everything you need to know.
I like that. Okay.
Because time kills deals. And sometimes
That
you've
is
got
true.
some person that's just looking for that right space, and your timeliness can help push that deal along.
That is true. And again, that is the nuance that you cannot learn in any school. You can take CCIM, they'll never be able to teach you that. It's kind of getting out and doing it, boots on the ground, learning where you get knocked down and you get back up and go, I won't do that again. How do I learn from this? That is a lot of what commercial real estate is. Leasing, sales, subleasing, all of it. So, I have enjoyed having you here. Thank you for letting us talk to you and talk at you for over an hour. And I'll be here much longer if you want to hang out. But I hope that we gave you some insight and some things that might help you as you progress on in whatever your endeavors are as a commercial broker, as an owner, as a business owner, leasing space. All of it, most everybody here, it's going to impact you day in and day out. So thank you.